All right, so this is week 11, outlook number 1. We'll begin with the British pound futures. So, going straight to the 4-hour time frame, we discussed in the previous outlook what the price action would look like. We were expecting for, or we posed a few scenarios. The first one was mitigation of our area of interest and then continuation to take out the low. Then I explained that we were in a very, very pivotal point because we were at a major macro structural point along with a major continuation past that structural point, which led to essentially the sensitivity or consolidation of price action inside of this area. And then we see that we ended up running higher, or firstly, we ran these lows and then we pulled back to go higher than the area of interest. Then we closed here on Friday as we were looking to head towards the high, and then we gapped all the way back down here towards this low, and then as you can see now, we took the high. So I believe the counter scenario, or it might be the second or third scenario, has happened here where we've run this structural point. And so there are a couple of thoughts running through my head right now, but keeping those at bay right now, going straight for we're strictly off of the technical analysis. The first thing that we have here is we've run a structural point, right? Based off of the run down to the structural point, we've now run, or the macro structural point, we've now run a 4-hour structural point. So now we need to assess what action is going to occur here. We need to know if this is a draw on liquidity or is it a break of structure. We'll know based off of the next candle or the next couple candles. We do have a closure above this, but just because we have a closure above this does not necessarily mean it's a break of structure. I need confirmation to see if a high is formed here, or do we continue running higher. If we continue running higher, then we have to assess, structural points and potentially looking at price action switching from bearish to bullish to continue taking out highs. If this ends up being a liquidity draw, then we'll look for opportunities for price to continue lower. And essentially, this was just an attempt to trigger these buy areas. Or sorry, this was an attempt, or this was not an attempt. This was an action to trigger these buys down here and then deliver them to a structural point, which is a liquidity pool. And so if the liquidity pool is strong enough or it has enough orders to sustain the price action of these buys or to deter it, then we'll get resistance and then we will go lower. So that's the logic here. All right, so that's what we're looking at. This is cool to see. Very interesting times that we're living in right now. As of the recording, this is March 9th, 2026. If you're keeping up with world events, there's a lot of stuff going on. But from the technical analysis perspective, all of this, is within reason. This isn't, this isn't anything new. All right. So, like I said, we're looking to see what the action is here. And if it's a liquidity draw, then we look for continuation of sells. If it is a break of structure, then we assess if we want to look for buys or if we're looking for further pushback or pullback into mitigation of these structural points. Because as I said before, there is nothing here to me that is unmitigated. Everything is completely balanced. So if price is looking to draw higher, then this is actually going to be a run towards the high, or we're pulling back to a deeper liquidity pool, which would be, this high, these highs here, and so on and so forth. We'll have to assess that. But as of right now, we've delivered to a major structural point, so this is not uncommon where we could see a potential pullback towards these deeper 4-hour structural points. All right, moving on. Let's go backwards here. Let's go to the Dow Jones. So we've got a lot of price action here on the Dow Jones. We explained what the range was at the time, and I'll actually put that back up here on the screen. So this is our trading range given the analysis that I did so far. And essentially all we've done is dive really deep, and I mean really deep, into the range. And as you can see, we've had a pretty deep pullback based off of resistance or trigger for buy orders inside of the discount somewhere in here. And I'm not going to, look for areas of interest or anything over here because I wasn't even looking at it. I just essentially just let this play out to see what it's going to do. There's a ton of volatility. I already, essentially missed my move here, which I wanted this, and it was such a beautiful play. I'm kind of upset that I did not catch this, but hey, it is what it is. As of right now, though, not really much to say other than we're still inside the range. We have not mitigated any liquidity points on this side of the range. I mean, we could say that there was probably a liquidity point got mitigated. I don't think we did mitigate this here. So if anything, we just have a response from mitigation of that liquidity point, which is effectively a draw on liquidity, which leads to the run that we're seeing now. So it's just being diligent and understanding how the trading ranges run and playing your opportunities accordingly. Right now, there's just a lot of price action. So we're going to see a lot of major swings as far as prices going, but not really swings in and out or swings outside of the range. We're going to be doing a large balancing act here on the Dow Jones. And conversely, we're actually going to skip gold for right now. On the NASDAQ, as you can see, we just ran the low of the price leg. So, and we talked about this before, was we needed to assess what the action was going to be. Is it going to be a draw on liquidity or a break of structure? This is 100% a draw on liquidity. So now it's going to be a very interesting sentiment here is this draw on liquidity strong enough to send us to taking out the high here? Because we just ran a lot of a lot of economic activity, buy orders, sell orders, ranging price action for months. And so if this was all just to purge or give us a draw on liquidity here at this effectively structural point, then this could be a major move to send us higher, or this could just be a false flag where we get a draw on liquidity and we don't want to look too far into this because we need to assess the action that this is going towards, right? We need to assess the high that this is looking to go to mitigate, which would be here. This would be this high. So we have a couple of highs that we can take out. The immediate one would be this high that was generated here that led to the break, of this low there. And then this led to the run on this. This is the last high that led to the break of the structural point. So this is the high that I'm really, really looking for to see what the price is going to do. And then this is just, these two highs are just the highs that are above it, but they're not really relevant to me. Now, the logic behind that is based off of how I define structural points and how I look at them. So the structural points to me are not just like the last high or just a random high. They have to have some sort of action associated with it. And so for the structural points, they're the last high or low that clears a liquidity point or previous structural point, etc. So as you can see, we do have a high here, we have another high here, we have another high here, but as we move towards these lows here, this high is no longer relevant to me because it does not clear any sort of liquidity. This high, same thing, does not clear any sort of liquidity, as in a liquidity point or structural point, but this high, it leads to the mitigation of this low, and this low here. GSB, and yes, there is a purple candle here, but you can see there's no high that formed. So this is the last high, logical high that I would want to see. And so for price, in order for price to look for price to continue lower, I want to see the action that occurs at this high. And if it does go higher, great. But this is the important point here for me to see how price is going to respond. Will it be a draw on liquidity or will it be a break of structure? If it's a break of structure, this would most likely be the next logical high that we move towards. But similarly, we have to assess, is this the high that cleared the liquidity? And not this liquidity draw, but is this the high that led to the clearing of some sort of low, which it's not, in which you'll see now that because of this will have uninterrupted price action if we were to break this high to a relatively, higher area. So this is a really, really crucial point to me to see if price action is going to sustain bearish effortness, or are we going to have a low effort liquidity run to take out all of these liquidity points that it formed over here, not necessarily structural points, liquidity points, and aim towards the high here, and effectively really this high, because this is the high that broke a previous liquidity point, so on and so forth. And then we'll look for a high there. But as of right now, that is definitely a draw. Liquidity, all of this effectively is null and void now, so we can clear all of this. But I really hope you guys are starting to understand how I'm looking at the price action based off of balancing of ranges and mitigation of inefficiency objects, and then targeting structural points and liquidity points. And it's all through these concepts I call actions, right? Where we're always looking at a breaker structure or a liquidity draw or an action and mitigation, which is the mitigation of the inefficiency object. That's the three main points that I'm looking at. Is always actions, and all my logic is based off of the actions, and then seeing, hey, if it does this, then it does that. If it does this, then it does that. That's it. And everything else after that is just stringing those things along to come up with your narratives, come up with your bias from the macro down to the micro perspective, and then playing execution trades off of that. All right. So that's NASDAQ. Let's get clear out. Let's clear this here. Mitigate that structural point there. So we need to see, as of right now, we've cleared out this really consolidatory range. What is the action that's going to happen here? And then we'll go from there. So we have that drawn liquidity, can clear all that. All right, cool. So, and then let's see, the last one was gold. All right, gold is still, messing around inside of the range. A lot of people were expecting gold to break the high, but not necessarily. Like I said before, we are in a range. So based off this bias, I would expect this kind of price action to sustain itself. I did have an area of interest and then an opportunity that I was looking at here, but we're going to wait and see what happens. I'm skeptical of how this is going to play out. I'm definitely looking for gold to continue lower because we are in a range and we need to take out some sort of liquidity point to fuel us if we are going to go higher, because there's tons of liquidity here on the discount side. But other than that, yeah, that's it for week 11 outlook number 1. Peace.